Now speaking, Kate Perlman, Vice President, Investor Relations. Lowe's hosted an investor call with Marvin Ellison, Chairman and CEO, Bill Boltz, Executive VP, Merchandising, Joe McFarland, Executive VP, Stores, and Brandon Sink, Executive VP and CFO. They reminded investors of the forward-looking statements included in their press release and discussed expectations for fiscal 2023. They also discussed certain non-GAAP financial measures. Now speaking, Marvin Ellison, President and Chief Executive Officer. In Q1, Lowe saw a 4.3% decline in comparable sales due to lumber deflation, unfavorable weather and lower DIY discretionary sales, with pro sales slightly positive despite 800 basis points of comp pressure. DIY sales were impacted by delayed spring and lower than expected discretionary demand. Despite market pressures, Lowe saw market share gains and delivered a 5% increase in adjusted diluted earnings per share to $3.67. The company is executing against its Total Home strategy, introducing the MVP's Pro Rewards program and expanding its Pro National brands. It is also replacing its 30-year-old operating system with a modern omni-channel architecture, unlocking labor productivity while enabling seamless omni-channel selling from within stores. By the end of 2023, it will have rolled out its market delivery model across 12 geographic regions. Now speaking, Bill Boltz, Executive Vice President, Merchandising. During Q1, 5 of Lowe's 14 merchandising categories saw positive comps: building materials, rough plumbing, paint, hardware, and appliances. The company is leveraging its improved omni-channel shopping experience, enhanced market delivery capabilities, and expanded assortment to take market share in appliances. Improvements include easy scheduling and order tracking for customers. Paint saw increased demand from pros taking advantage of delivery, rewards program, and improved product assortment. New private brand closet organization solutions were launched across 4 brands to meet a range of needs and budgets. Building materials were driven by investments in pro products like the Pink Bar 10 and 20-foot fiberglass rebar, while rough plumbing was led by strength in water heaters, HVAC, plumbing repair, and pipe and fittings. Lumber saw pressure from deflation but had the highest unit comp in the company this quarter. Hard lines were pressured by delayed spring, volatile weather in the West, and softer discretionary spending. Lawn and garden saw higher demand during periods of improved weather, and new Green lawn fertilizers and grass seed products are exceeding expectations. Hardware saw strong attachment rates and higher lumber unit sales. 300 additional stores will have a rural framework by year-end, with broader product offerings in categories like pet, livestock, trailers, fencing, utility vehicles, specialized hardware, and Carhartt apparel. MSD associates now use dedicated Zebra smartphones with an app designed to optimize their time and give step-by-step instructions. Now speaking, Joe McFarland, Executive Vice President, Stores. Lowe's is committed to being the employer of choice in retail, having increased hourly rates for store associates by 20% and investing $3 billion in wage and share-based compensation since 2018. This ongoing commitment has resulted in their best staffing levels in 3 years, improved retention and highest customer satisfaction scores ever. The company is also taking other steps to show appreciation, including closing stores on Easter for 4 consecutive years and lowering prices of food and break rooms. 85% of leadership roles are now filled internally, up 700 basis points over 2 years. Pro customers can now use online business tools like building and downloading PDF quotes and tracking orders on Lowes.com or the mobile app. These tools have seen better than expected adoption rate and sales growth. Through their MVP's Pro Rewards program, pros shop more frequently, buy more per trip and spend more overall. Customer satisfaction scores are up 200 basis points over last year, with 75% of pros reporting healthy backlogs. Lowe's is also scaling perpetual productivity improvement initiatives like replacing self-checkout systems with proprietary registers and enhancing inventory visibility and operational efficiency. They are also streamlining pickup in-store processes, driving a 400 basis point increase in customer satisfaction scores. Lastly, they offer a 10% military discount and support the military community. Now speaking, Brandon Sink, Executive Vice President, Chief Financial Officer. Joe, Q1 results showed GAAP diluted earnings per share of $3.77 compared to $3.51 last year, and adjusted diluted EPS of $3.67, a 5% increase from the prior year. Sales were $22.3 billion, including a shift in fiscal calendar in the Canadian retail business. Comparable sales were down 4.3%, partly due to later start of spring and lumber deflation, 350 basis points. Average ticket was down 0.3%, transactions declined 4%, and monthly comps were down 3%, 5.4% and 3.9% in February, March and April respectively. Gross margin was 33.7%, down 35 basis points, adjusted SG&A 17.4%, leveraged 79 basis points, and adjusted operating margin 14.4%, leveraged 47 basis points. Adjusted effective tax rate was 23.6%. Inventory finished at $19.5 billion, down $0.7 billion, with U.S. inventory units slightly down to last year. 2023 outlook is for sales between $87 to $89 billion, with comparable sales ranging from -2% to -4%. Pro outperformance of DIY, adjusted operating margin 13.4% to 13.6%. Capital expenditures up to $2 billion, and adjusted EPS in the range of $13.20 to $13.60. Q2 expectations include approximately $400 million headwind to sales, 150 basis points lumber deflation pressure on sales, and $250 million benefit from delayed spring. Bank of America Merrill Lynch analyst Liz Suzuki inquired, have the benefits of operating in lower-cost markets like rural stores impacted your focus on improving operating margins? Are you considering a shift in geographic mix and store expansion to capitalize on these benefits, given that rural stores usually have lower sales per square foot than stores in more densely populated areas? Marvin Ellison replied. Marvin reported that 300 stores will be expanded with extended categories such as Carhartt apparel, farm and ranch types of items. This expansion is expected to lead to an improvement in sales per square foot and profit growth. The survey of customers gave the list of items they wish to purchase in one shopping occasion. Pilot locations have already seen improved sales per square foot with this initiative. Brandon Sink replied, I am excited about the rural stores we have piloted and the positive profit profile they offer. We are planning to scale up the program by 2023, which should bring in additional top-line revenue. Bank of America Merrill Lynch analyst Liz Suzuki inquired, have the stores seen an online penetration similar to the company average, or is it higher or lower? Marvin Ellison replied, I mentioned that we're retiring an old legacy operating system, which will enable our 300,000 plus associates to more easily perform omni-channel transactions. It will create a more seamless connection between physical and digital commerce. This transition is expected to accelerate the growth of e-commerce. Bank of America Merrill Lynch analyst Liz Suzuki inquired, I received confirmation that I have asked my question to Horvers and that he is muted. Is the next question coming from Simeon Gutman with Morgan Stanley? Morgan Stanley analyst Simeon Gutman inquired, have the sales and margin targets for Q2-Q4 of this year remained consistent with what was originally guided at the start of the year, or have any changes been made? Brandon Sink replied, in Q2, sales are expected to be at the upper end of the full-year guide, including a $250 million delayed spring benefit, offset by 150 basis points lumber deflation and a $400 million weak shift drag. Pro business is anticipated to continue outperforming DIY while lumber inflation moderates in the second half. Online and core DIY businesses such as appliances and paint are expected to remain strong, staying in line with the full-year guide. Morgan Stanley analyst Simeon Gutman inquired, do internal initiatives help hold up margins, and are you pivoting or prioritizing any of these initiatives faster than others? Brandon Sink replied, gross margin is expected to remain relatively flat for the year due to headwinds from supply chain expansion and investments in pro-growth initiatives. However, there will be benefits from higher private brands penetration, lower commodity transportation costs, and pricing initiatives. SG&A will see 40 to 60 basis points of leverage due to planned wage increases and strategic investments, while lower sales are mainly due to volume-related changes. Citi analyst Steven Zacconi inquired, can you provide more information about the second quarter guidance, particularly in regards to how the business is trending in May due to the volatile weather? Marvin Ellison replied, Marvin accepted the offer. May is performing as expected with seasonal weather responding around west, south, north and east according to current guidance. Citi analyst Steven Zacconi inquired, I'm wondering what Marvin's opinion is on how long this weakness in discretionary spending could last, given the many macroeconomic factors at play. Marvin Ellison replied, we have spent a lot of time looking into the long-term health of home improvement, but it is difficult to predict. Structural drivers remain strong, such as consumer savings rate, pent-up housing demand in the age of homes. The highest correlating factors to sales are disposable personal income, home price appreciation in the age of housing stock, leading us to believe. Citi analyst Steven Zacconi Inquired, I wish myself the best of luck for the remainder of the spring season. Oppenheimer and Company analyst Brian Nagel. Inquired, have you seen any noticeable differences between discretionary in Q1 compared to Q4, and what color can you provide on the current weakness in discretionary relative to weather disruptions? Marvin Ellison replied, I have experienced a pressure in big-ticket discretionary purchases, particularly in DIY customers, which accounts for 75% of my business. The unseasonal weather has had a disproportionate effect on Q1 due to the seasonal spending taking place. However, when the weather became more normalized during May, we saw an increase in spending with expectations of $250 million being recovered from delayed spring. Small and medium-sized customers remain consistent, successfully achieving positive comps in Pro for the quarter with 800 basis points of lumber deflation. Brandon Sink replied, Brandon here. We are seeing a normalization of consumer discretionary spending from travel, restaurants and more towards necessity-based purchases like groceries and gas due to inflation. At a broad level, business units and transactions have reverted to 2019 levels, with nuances within that. Pro categories, building materials, rough plumbing, lumber, are seeing an increase in units, while appliance units and share continue to grow. We are optimistic about the medium to long-term outlook for these. Oppenheimer and Company analyst Brian Nagel. Inquired, I appreciate the interesting comments about my rural stores and strategy. Can you provide more insight into the current volume of those units compared to other, higher volume stores? Additionally, what kind of increase in store volumes could be expected from remerchandising efforts, and in what time frame? Marvin Ellison replied, I have been piloting a new product assortment for over a year and am pleased with the results. I plan to expand the product assortment to 300 stores, and Bill will provide more details on the categories and expected results. Bill Boltz replied, Lowe's is expanding its product categories with the launch of Carhartt and Wrangler brands in rural markets. The company is also focusing on livestock feed, fencing and water troughs for consumers' homes. They have received positive customer feedback from their initial pilot program in 300 stores. Marvin Ellison replied, Brian, both Bill and I grew up in rural parts of the country, Bill in Montana, me in Tennessee. We piloted ATVs with no idea if customers would respond, and it has been a great success in these rural markets. We are also finding categories in those stores that could be applicable in non-rural locations. We perceive these rural and remote stores as a competitive disadvantage, but we now see they give us opportunities to grow top-line sales per square foot and improve operational profits with better technology, omni-channel capabilities and efficiencies. Barclays analyst Seth Sigman. Inquired, have I understood correctly that the comment in May indicated that Q2 would be at the upper end of the range, which was part of the original guidance that predicted sequential improvement? What were the drivers of this improvement? Marvin Ellison replied, in May, performance met guidance and key seasonal categories are responding well in targeted geographic locations. Brandon Sink replied, consistent with guidance, Q1 had a 350 basis points pressure from lumber deflation and the delayed spring benefit of $250 million. Q2 is expecting 150 basis points pressure from lumber deflation and a $400 million drag from the weak shift benefit flipping into this quarter. Barclays analyst Seth Sigman. Inquired, have you seen any evidence of elasticity in lumber pricing, and is there an opportunity to roll back prices or keep them flat given the strong unit volume increase you saw last year? Brandon Sink replied, over the last couple of quarters, the pace and cost increases of tickets and transactions have slowed dramatically. We expect a modest level of product inflation for 23 from pricing actions taken in the second half of last year. Q1 saw an increase in average ticket ex lumber, and deflationary pressure is expected to continue to impact average ticket in Q2, but not as significantly as Q1. Outside of commodities, there is not anticipated to be any meaningful deflationary pressure. Goldman Sachs analyst Kate McShane inquired, have our market share assumptions changed since the first quarter, when we saw wins in this area due to our success in catering to smaller and mid-sized pro customers? Marvin Ellison replied, we are pleased with our pro strategy over the past 4 years, which has been focused on small and medium pro customers. Despite 800 basis points of lumber deflation and facing 22% growth last year, we have managed to achieve a positive comp. We are confident that key initiatives will help us continue to take market share. Joe McFarland replied, our pro customer base is smaller in size, however since introducing our MVP Pro Rewards program our pro customers have engaged with us and are spending 3x more than non-engaged pros. We have implemented a new CRM system to better anticipate the needs of our pro customers and build relationships. As a result of the loyalty program and CRM system, Pro Customer Later is improving and we. Marvin Ellison replied, I recently conducted a survey of our Pro customers in April, and 75% reported that their backlogs were still healthy compared to the fourth quarter. This gives us confidence that we can grow market share and increase 2 additional markets within this customer segment. Bill Boltz replied, we use data from the extract line, other relevant market data and broader market data to triangulate our market share. Our performance in key categories like appliances has seen unit growth, pro growth, acceleration in online business, gaining traction with private brands, which gives us confidence we are gaining share. We have also seen positive growth in areas such as paint where we feel we are gaining market share. Brandon Sink replied, I am pleased with the execution of Total Home Strategy, which has resulted in 11 consecutive quarters of double-digit growth despite an 800 basis point drag. The online performance has been particularly impressive, at plus 6%. This gives us confidence to grow 100 to 200 basis points above the broader market and reach Pro 2X by 2023. Jefferies analyst Jonathan Midashevsky inquired, have the localization efforts of the past few years been more focused on preventing markdowns or acquiring new customers and increasing wallet share from existing customers? Marvin Ellison replied, we are taking out categories that were at risk of being marked down due to lack of localization and replacing them with new categories. This will give us a larger share of wallet from customers who previously shopped us and other retailers, as well as attracting new customers. Additionally, new technology such as self-checkout and mobile devices will drive increased productivity and profitability in the stores. Bill Boltz replied, we had an early read on 2 new customer categories, pet and apparel, which is exciting as it indicates we are drawing in new customers. Jefferies analyst Jonathan Midashevsky inquired, have you seen any trends in markets where housing prices have cooled, such as the April drop, that would suggest pressure in those areas? Marvin Ellison replied, we are not seeing any disproportionate sales impacts in certain markets and are tracking them aggressively. No significant changes have been observed. Guggenheim Partners analyst Stephen Forbes inquired, did Pro Comp in the first quarter exceed internal expectations despite lumber deflation, and what drove the outperformance? What progress has been made towards OPEC's productivity goals set for the year, and what is the year-end goal? Marvin Ellison replied, Pro outperformed our expectations by 800 basis points in regards to lumber deflation for a specific customer. Joe mentioned the maturity of the MVP Pro Rewards program, increased Pro-related national brands, improved fulfillment capabilities and digital capabilities that delivered a 6% online comp during the quarter. We believe these initiatives will drive market share gain. Brandon Sink replied, I am seeing operational efficiency initiatives such as store tech modernization and front-end transformation driving our EBIT expansion plan of 40 to 60 basis points this year, which is in line with our expectations. Kate Perlman replied, I appreciate everyone joining us today. On Friday, I'm looking forward to speaking with you at the annual shareholders meeting. Additionally, in August, our second quarter earnings call will take